The broadcast is now starting. All attendees are in listen-only mode.
Hey guys, this is TimSparkman and welcome once again to our Monday product training call here at noon Central Time in Dallas, Texas. Thank you everybody for logging in and Happy New Year's. Hope everybody's staying warm. I know we have had a brutal cold front come through Dallas and all the way over to our friends in Atlanta, Georgia, Denny and Bobby. But as always, thank you, thank you, thank you. And before we start, guys, I'm going to take about 3 minutes. And if you're not in Texas, you're going to say, this doesn't apply to me, but actually it does. You should use the principle that I'm fixing to show you for wherever you're going this week and wherever you're getting ready to show the opportunity. But for those of you who have not seen, there is a Texas tour going on this week, and it will start Tuesday night in Houston, Texas. It'll go to Atlanta, or it'll go to San Antonio Wednesday night, and on to Dallas on Thursday night. And, you know, what I'm fixing to show you guys, what I'm fixing to train you on for the next 3 minutes, it works. It's a system that I used heavily in the United Kingdom, in Scotland, Ireland, England, where any time that you went 6,000 miles, you wanted to get as many guests in front of everyone as you could. So here's what I want everybody to do. Number one is called name recognition. You're all saying you already have your list, but I want you to redo your list in the next hour. Simply go to your smartphone, look up Yellow Pages, and go to A. And a few of you that's over 50 might actually have a Yellow Pages sitting around. And when you go to your Yellow Pages, start at the very first one is accountant. And ask yourself, who do I know that's accountant? Who do I know that works for accounting? Who does my accounting? Who do I know that went to college to be an accountant? Adoption. Who do I know that was adopted? Who do I know that adopted someone? And acupuncture, and the words just go on and on and on. And I've done this so many times, and what can take place is you can sit in front of me and say, I have no more warm market, I've talked to everybody I know, and if you simply follow that system with me, and we have a Yellow Pages in front of you, the average person gets 150 to 200 brand new names by the time we get to H in the Yellow Pages. And the reason that takes place is by the age of 18, you have over 2,000 names, first names in your head, and you can only write down 200 of them. Obviously, as you grow over, the list expands, but the memorization skills dwindle. Once you have that list, start thinking, who do I know in Texas? So you might be in Sacramento. You might be in Atlanta right now. Wherever you are, keep thinking, who do I know in Texas? Not who do I know in San Antonio, who do I know in Dallas, who do I know in Houston. Last time Philip was with me actually in Manchester, London, we had people going to a weekly meeting that had came from another country. So you can get somebody to drive 2 miles if first you get the list right and then you do the edification right. The next thing you want to do is you want to call the person up. You want to change your tone of voice. If you talk quick like me, talk slow. If you talk slow, speed it up. It's not what you say, but how you say it. Don't ask them how they're doing. Don't ask them how their dogs are. Don't ask them how the kids are. Go straight to the subject. Say, it's very, very important. I don't know what you're doing Tuesday night. I know you're 70 miles from Houston, but I need you to stop and get to this executive office. The gentleman I partnered up with, he's from Virginia, built a large IMO that was a marketing organization, insurance agency that was doing over $200 million a year, and he's opening another company. I know you don't know anything about insurance, but trust me, you want to sit down and talk to him. And then you tell them, I've already told Philip all about you. He's expecting you. It starts at 6 o'clock. Get there 15 minutes early. Okay? Now, these are the key words that will make or break you. I've already told Philip all about you. I've already told Ralph all about you. I've already told Robert and Michelle all about you. I've already told Tim all about you. Get there 15 minutes early. We will be waiting on them if you're in another state, and we'll introduce ourselves and take care of them. Okay? If you're local, you should have a minimum, every person, of 5 people in your car for this 6 to 8 o'clock opportunity. It's going to be training, it's going to be recognition, and it's going to be an opportunity. They'll love every bit of it. Okay? But they can't show up if you don't show up. Get the new list, get the names, create a sense of urgency when you call them. understanding that on January the 1st, most people woke up and they had one thing in their mind. I want to lose a little weight or I want to make a little more money. Can't help them on the weight loss. That's between them and them, but I can show them how to make a little bit more money, okay? They're looking for an opportunity. You just need to call them. So use that this week, guys. Don't think because you're this 20 miles away, 30 miles away, it doesn't pertain to you. And then also, if you're in Sacramento, if you're in Atlanta, use the same principles if you're in Virginia to get them to your local meeting that you're wanting them to come see Donald Mayo. Edify the speaker. Edification, it's very important. Speak of their history, what they've done in the past. Keep the invitation simple and don't take no for an answer. We won't push somebody to get involved with us in the business, but we'll push them to take a look at it. Now, guys, enough with that. I want to express my deepest thank you for the gentleman that's coming on today. And I want everybody to please listen to what I have to say for the next 60 seconds and, more importantly, my tone of voice. If I was a new agent and I was a experienced agent and I had a new agent coming in to the company of Envita, the first carrier, the first product, and the first leader I would introduce them to is on the call right now. So if I'm Bobby White and I have Bobby Flowers coming in, or I'm Denny Faircloth and I have new agents coming in, whoever else, Bridget's has been recruiting, I know we're creatures of habit. I know you have a product that you're familiar with, but guys, I'm going to tell you the key here with a new agent is how quick can you get a check in their pocket. I'm going to tell you how you get a check in their pocket quick is with a company that wants to grow with you that still have not reached their goals, that where they want to meet with their company. They might be in the top 50 in the United States, but they might be wanting to make the top 10. The only way they can do that is with us, with other IMOs. And when that takes place, they have a sense of urgency to help you out and help you build your organizations. It is so refreshing that I can pick up the phone and actually call Eric on his cell phone, that he returns an email on his holidays, which I wished he wouldn't on vacation. But it's the signs of a company that's wanting to grow with us. So guys, as always, it is my honor. Emeritus is somebody we have partnered with. It's something that we are very, very excited about. And Eric Ojeda, who is over sales for the company, has been nice enough to come on and do the training again. Guys, take your pen and paper out, open your mind up, introduce this to your new agents, and I can promise you he will show them how to create an illustration that is equal or better to what you're used to. But more importantly, here's the key, get them paid quickly, or I'll say quicker. We use a lot of great companies, but Emeritus is hungry. Eric, are you there, buddy?
I'm here.
Buddy, it's
So
all
thanks.
yours. I'm muting myself, and I'm getting my pen and paper, and it's yours.
All right. Well, thank you, Tim, for the kind words. Thank you to everyone for having me on today. I've met many of you and talked to many of you on the phone, so look forward to those relationships growing forward. Today I'm going to talk about our IUL product. This might be a little bit of a recap for some of you that have seen this before. We'll be going through some illustration training, but I want to take it one step further, which I don't think any of you have seen before, on how you can enhance the illustrations that you're showing your client with another tool that we have called InsMark. But before I get started, I know there's a number of you on the phone, so I just want to call out a few, if I may, just to thank for the business. I know a number of you have done some business with us already, so I just want to call you out by name so you know who you are and everybody can see that you're writing with us. So Bobby White, thank you. MC Elman, Vanessa, let's see, I might miss you, some of you, so if I do, I apologize. But Luis Valdez, Walter Ferguson's got some new apps in. Who else is on the line here? So if I've missed some of you, I do apologize. Deborah Maxey on there as well. So thank you all for getting off to a great start with Emeritus, and we look forward to growing with the rest of you if you haven't submitted business already. So feel free to type in questions along the way. I'm sure we'll open it up at the end for some questions. But again, I look forward to introducing you and refreshing you on the Emeritus products. All right, so first of all, why do business with Emeritus? Well, Tim mentioned some of the things already. You know, we're looking to grow in the independent space, and we can't do that without the partnership that we're forming with some of the IMOs out there, and then specifically NVIDIA. We say great things coming with NVIDIA and a great way to grow what we're doing as a company. Also, we're a mutual organization, so you know, we answer to the policyholders and we answer to the sales force, all the agents that sell our products. So, you know, we don't answer to stockholders, so we're not making decisions based on how to make stockholders money. We're making decisions based on what the policyholders and the agents that sell our products need. And part of that decision is growing this independent world and working with all of you. We're looking for a partnership, and that means doing things like this. You know, we were recently out in Texas back in November and making sure we could get introduced to a number of you and really working as a partnership with you. You know, Tim mentioned answering emails when I'm on holiday vacation. You know, more than happy to do that if it means working and growing your business. We have financial strength. We're a strong company, sound. We got lots of capital to back us up, and that allows us to grow in a partnership with NVIDIA, and we're committed to growing that relationship. We're simple and transparent to understand, so our products don't have a lot of fine print. What we're covering today is what you can take to your clients, and there shouldn't be any questions at the end of your presentation on what Emeritus is offering. And we also have a wide product portfolio. So mentioning wide product portfolio, our main focus will be on the Excel Plus IUL, but you know, we have found needs for other products already with NVIDIA, so just keep in mind that we do offer not just life products, we offer disability insurance, a whole life, UL, and IUL. So hopefully we have something for all your products, but again, the main focus is on our Excel Plus IUL. So one of the ways we form a partnership is not only offering the products for you and your clients and making sure that you have something to fit all their needs, but we want to reward you for doing business with Emeritus. So I can't talk enough about this program, our bonus program, and hopefully we can make this part of your compensation on a monthly basis. But every month we'll look at the number of life premiums that you have paid and the total amount of premium that you have paid. So as long as you have 2 applications paid per month and at least $2,500 in target premium, we'll pay out a bonus of $200, all right? And the highest bonus is 9 apps and then $10,000 of target premium. That'll get you an additional $1,000. So if you're someone that doesn't write a lot of apps but you do high amounts of premium, we also have a new, or sorry, it's not new, but we have a large case bonus that you can qualify for instead. So if you have at least 2 apps paid and $10,000 in paid target premium, we'll pay out a large case bonus of $500. So I know a few of you already have 3 apps in and probably $3,500 in premium, so hopefully we can get you at least a $300 or $400 or maybe even a $500 bonus by the time the month's over. All right, so Emeritus has 2 products. I'll touch about one quickly, and then we'll move on to the Excel Plus. Our first product, actually, before I don't have any slides on it, so I'll just talk about it quickly. We have the Excel Index UL. So the Excel Index UL is our older of the 2 IUL products, and that is really geared towards someone that needs some sort of guarantees within an IUL, but they're looking for that upside potential that an IUL offers. So the Excel Index UL offers a 2% floor that's guaranteed. So regardless of how the indice performs, they're at least going to get 2% each and every year, okay? And then it has one indice to choose from, the S&P 500, on an annual point-to-point basis. And they can either get the capped or the uncapped. Now our cap is currently 7.5% on this product. Again, so it's for a client that has maybe less years to work with, 15 years or less, and they're looking for some sort of accumulation. They like the idea of having a guarantee by getting at least 2% regardless of how that indice performs. And they like a little bit of upside potential, but they're willing to give up a little bit of that upside to get those guarantees. So that would be the Excel Index UL. But the products I'm focusing on today is the Excel Plus. So Excel Plus, really, plus always means more, something in addition to what you're getting with the Excel Index UL. So the plus that we're offering with the Excel Plus IUL is a choice of 3 indices. So the client can invest their money either into the fixed account, of course, or choose from 3 indices, and that's the S&P 500, the Russell 2000, or the MSCI EFA, which is an international indice. So those products, or those indices, are all on an annual point-to-point basis, and they all have a 0% floor. Now, if they wanted some guarantees, we still have that fixed account option, and they would have a guarantee of 2% in the fixed account. But as far as the indices, it's a 0% floor, and our caps, the highest is currently 12% on the S&P. Okay. With this product, we also have the Care for Life Acceleration Rider, which is also on the other IUL, but this is our living benefits, so for the critical, chronic, and terminal illness. One of the other ways the Excel Plus has more is with our Guaranteed Account Value Bonus. So starting in the 11th year and beyond of your client's policy, we'll give them an additional 40 basis points based on the cash value. So for some reason in that particular year, or one of those years, they don't earn anything because the indice was flat, we'll credit them 40 basis points no matter what. Now, a lot of IULs out there in the marketplace do offer some sort of a bonus, but there's not a lot that are guaranteed. So again, Emeritus is pretty transparent. There's no type of look back on that 40 basis points. In the 11th year and beyond, we guarantee that we'll pay that out to them and add that to their cash value. The Excel Plus also adds the option of a variable loan. So this is important when taking money out of a policy. The client can either take withdrawals out or they can loan their money out. With the Excel Index UL, they only have the option of a fixed loan. With the Excel Plus, they can either choose a fixed or a variable loan. Now, if you're not sure what a variable loan is, that means if you loan the money out, you still have that loan portion of the cash value still participating in the performance of the indice. So by having a variable loan, that allows your withdrawals to be greater because your loan money is still working for the client. So the client can actually choose either a fixed or a variable loan, and if they're not comfortable with the way one's performing, they can actually change what type of loan they have once per year. So really, the target market of the Excel Plus, well, it's obviously somebody that's looking to build cash value. So they're looking for that upside potential. Now, one of the main reasons for using an IUL, if you're not aware, is for supplemental retirement income, or using the money, the cash value, for a later purpose in time. So in most of our cases, someone is overfunding an IUL. They want to rely on that cash value to pull out later on in life, maybe in their retirement years, to give them additional income from another source other than their 401k, or other than their mutual funds, or other than their Roth IRA. Because most times when talking with a client, what they're doing to build their retirement income is not enough, and they need to do more. So they're looking for that upside potential growth. Also, this is someone with a longer time horizon. This product really performs better of our two IULs for 15 years or longer. So life insurance isn't meant to put money away and then take it out immediately. So we do want some sort of a longer time horizon. Not to say 10 years won't work, but 15 years or longer does work very, very well. And they also need more options for diversity. So that's where the 3 indices come in to choose from. It allows them to spread their money and diverse their premium dollars. So again, the 3 different indices, hopefully you're familiar with most of these. The S&P 500, that's a pretty common indice that everybody's aware of. And so the client can either have that with a capped or an uncapped option. And then we have the S&P 500 on an uncapped basis. We have the Russell 2000, and then the MSCI EFA, which is our international indice. It stands for North America, or sorry, Europe, Asia, and the Far East. So it's markets outside of North America, including Europe, Australasia, and the Far East. So about 22 countries. They're all well developed. You're looking at Australia, New Zealand, Japan, and that region of the world. And then a fixed account with a 2% guarantee. Some of the riders that we have, and I'll talk just briefly about a few of these, but there's a number of riders that the client can choose from in order to enhance or give their policy a little bit more. Care for Life, our living benefits, I'll talk a little bit in a few slides, but that is a rider that's already attached to the policy, so everyone gets it. That's issued at a Table B, or better, and there's no cost for our living benefits rider. So everyone that's a table or B or better gets that. One of the other things I want to mention is the total disability benefit rider, and that's about the fifth one down or so, or sixth one down. So the total disability benefit is a great rider that you should look at adding anytime you're running an illustration or your sale involves overfunding an IUL. Because what happens is someone's overfunding their IUL and has a purpose for this life insurance contract to benefit them in their retirement years. What happens if they become disabled and they're no longer working? Are they going to be able to afford their premium for their life insurance policy? And more times than not, they will not be able to fund their life insurance policy. They're going to need to rely on any income they might have, whether it's through Social Security or maybe it's from their disability plan through work. They're going to need that money for their living expenses, to pay their mortgage, pay their rent, feed their family, pay their car payment, their insurance, all those types of things. So what happens is they're not able to fund their life insurance policy. That plan that you set aside for them falls apart. So everything you showed them about what I'm going to show you later about building cash value to supplement the retirement income, they're not able to do that because they're not funding the life insurance policy the way that you have explained or set up for them to do. So with the total disability benefit, if they become disabled and they're unable to do their own occupation or anything they're reasonably trained for, Emeritus will actually pay their premium for them. So the premium that they specified at the time the policy was issued, Emeritus will continue to pay that premium for them. And so that gives them a self-completing plan. Self-completing plan means the plan you set forth, even if they become disabled, their plan stays in force. Their premium continues, and then they'll be able to live off the income stream that you showed forth in the illustration. So it's a great rider to look at, and it's very, very, very low cost. And then, of course, down there about the third from the bottom, we do have a children's insurance rider. So I know many of you are working with younger clients that have young kids. So that's a great benefit where we can cover their children for either $25,000 or $50,000 of coverage. And then at age 25, those children can convert to up to 6 times that amount without going through underwriting. All right, so why use an IUL? We talked about using life insurance for supplemental retirement income. So why do we do that when we have all these other tools available to plan for retirement? We have 401ks, we have IRAs and Roth IRAs, we have mutual funds, we have annuities, we have all types of investments. So why don't we just use those? Well, I'm not saying don't use those. Some out there may disagree a little bit, but if we're looking at 401ks, our employer does give us matches for the most part, so why not get that match at least and put in the minimum and get their match? That's free money, I guess. Roth IRAs are a great tax-free investment, and you're able to pull out money tax-free with Roth IRAs. But when talking to clients, you find out pretty quickly that what they're doing in 401ks and Roth IRAs and what they're hoping to live on in their retirement years does not add up. They're not doing enough in their 401ks. They're not doing enough in their Roth IRAs to give them the lifestyle that they want in the retirement years. So there's a few choices they can make. They can either earn more, which we have no control of if we're investing in the market. They can either lower their lifestyle when they retire, so they can say, you know what, I'll live on less. I'll give up the lifestyle that I want. Most people aren't going to want to do that. So the other option is to save more. And so why would you save more in an IUL? Well, first off, it's life insurance. So you get income tax-free death benefit. If they die, you already got a wealth that's left to their beneficiaries, tax-free death benefit. IULs also offer tax-deferred growth. So just like annuities or IRAs or 401ks, their growth is tax-deferred. We also have the upside potential and the downside protection. There's not many investments that can give you an upside potential, especially up to 12% with our cap, and that downside protection where the client doesn't have to worry about what happens if the market's down. It takes a lot longer to recover from an investment that loses money than one that earns 0 in a given year. There's also no contribution limits like we see on qualified plans, IRAs, 401ks, or other investments. You also have ready access to cash value. So there's no rules on when you can take money out. Sure, there's surrender charges that apply to life insurance, but there's no 59.5 rule like you see with qualified money, where the client's restricted to what age they can take money out. With life insurance, they can take money out at any age if they choose to. There's also no RMDs or distribution penalties. So with qualified money, we have the 70.5 rule. A client has to start taking money out at 70.5 or they're penalized. With life insurance, they never have to touch their money. So if their needs change in the plan you put forth, they no longer need it, that's great. Just let the cash value continue to grow and let that death benefit continue to rise for their beneficiaries. There's also no effect on Social Security. So unlike other investments, Social Security will not look at their life insurance cash values and have any effect there on the amount that they're eligible for. Also, if you have clients that are worried about putting their kids through college and maybe their children need financial aid, well, most investments have an effect on if a child can receive any financial aid. Financial aid is not affected by the cash value in life insurances, so keep that in mind as well. Plus the Care for Life, the living benefits, which I'll talk about later, no other investments have any type of living benefits like you'll see with the Care for Life. So really an IUL has all the perks that we see with other investments and qualified plans without any of the drawbacks, and then some, with the tax-free death benefit, the Care for Life acceleration rider, and the upside potential with the downside protection. So speaking of living benefits, and hopefully most of you are aware, I know there's been a lot of talk with everyone I've spoken to at Envita about living benefits. Well, living benefits are huge. And the Care for Life rider provides living benefits in the event of a serious illness such as critical, chronic, or terminal illness. Now, what's the emeritus advantage when looking at our Care for Life? Well, for one, there's no cost for it, so that's huge. Also, emeritus, like I said, is pretty transparent, so you know what you're going to get. The client knows well in advance what type of benefit amount they're going to receive if they have a critical, chronic, or terminal illness. They'll know from the moment they see the illustration that you show them, even before they sign an application. The client can potentially also be left with more death benefit when using our Care for Life. There's no receipts needed, so the client can do whatever they want with the money. They can use it how they choose. If they have a critical or chronic or terminal illness, they can use it for their medical bills. They can use it for a dream vacation. We don't care what they use the money for. So before I go on to some of the advantages of the Care for Life, if you're not familiar with why living benefits are so important with life insurance, well, the main reason is, we all know what life insurance is for. So life insurance obviously is what happens if we die, to replace our life, give something to our families. We're also going to look at building cash value and using it while we're in our retirement years. But what happens if you live too long? You live too long, meaning you get in those older ages and you become sick. I mean, everybody's living longer, which gives you a lot more potential to have an illness, a critical or chronic illness, in those later years. So if you live too long, living benefits allows you to access your death benefit in that event, in the event that you become critical or chronic illness. Those illnesses are very expensive, and thousands of dollars can be spent on medical bills or for housing or care for any type of illness. Also, what happens if a loved one needs to take off work to help that insured through their critical or chronic or terminal illness? Not only will the insured have a loss of income if they're still working, but that loved one could have a loss of income to help their family in a time of need. So living benefits that money can be used to replace a loss of income for both the insured and maybe to take care of that loved one who's helping out. So our Care for Life is a little bit unique when it comes to living benefits. Emeritus offers the lean approach versus the discounted approach. They're both great approaches, they're just different. So the lean approach means emeritus, the amount for critical, chronic, or terminal illness is predetermined, and the client will know ahead of time what they're going to get when they file a claim. On the discounted approach, if a client has a critical or chronic illness, the benefit amount actually depends on the life expectancy or the severity of the condition. So at the time of underwriting, the insurance company will look at the severity and the life expectancy, and they'll determine the total benefit amount that the client's eligible for. Okay, so the lien approach is different. The client knows what they're going to get ahead of time. As far as the death benefit on the lien approach is reduced by the accelerated amount. It is a lien against the death benefit. On the discounted approach, the death benefit's recalculated and it's reduced, and sometimes there might not be any death benefit remaining at all. So quickly, what we'll pay out for terminal illness, that's if they have a life expectancy of 12 months to live or less, we'll pay out 75% of the death benefit to a maximum of $1 million, payable as a lump sum. Chronic illness, the inability to perform 2 of the 6 activities of daily living, and they recertify annually, will pay out 50% of the death benefit with a maximum of $1 million, either in annual lump sums or we'll do monthly installments as well. Critical illness means severe illness. Here there's some of the triggers: open heart surgery, angioplasty, myocardial infarction. You can see those there. We'll pay out 25% of the death benefit, up to $125,000 as a lump sum. So just to give you an example of the lien approach versus the discounted method again, if a client has a $500,000 policy and they have a critical illness, meaning we'll pay out 25% or $125,000 as a lump sum. If that were the case, they know they could at least get $125,000 if that's what they choose. So if that's what they wanted, emeritus, we would pay them out $125,000 as a lump sum, and the remaining death benefit would be $375,000. Now with the discount method, they might have the opportunity to get more benefit paid out to them, but there's a minimum and a maximum based on their policy. So again, at the time of the claim, the insurance company underwrites the claim, and they could say, the illness is not very serious at all, so we're only going to pay you out maybe $2,500, maybe $40,000, but something less than they would get with the lien approach. But again, there is the potential that they could get more benefit. But if it were me, I'd rather go in and talk to my client and have the guarantees that they knew what they were going to get up front and not have to wait to be underwritten. There's a lot of confusion on the discounted method. Many times the client goes into a claim thinking they're going to be eligible for the maximum and then finding out that they're actually eligible for a lot less. Okay, again, with the lien approach, emeritus offers guarantees. The client knows what they're going to get. They know how much death benefit is going to be remaining. They have protection. The policy will remain in force, and it's very, very easy to explain. Now, there's a question through the chat. Any updates on living benefits in California? Yeah, no updates. We're still trying to push it through in California. I do know we have a new IUL with living benefits coming out in June, so hopefully that one will stand a better shot of getting approved in California. And the total disability rider is approved in California. That rider that we talked about paying the premium for the policy. All right, now keep in mind we do have state variations, so make sure you check that out and look at the different variations on the Care for Life and make sure you have all the details for your state. All right, before I get into the illustration software, just want to make sure to point out a lot of you asked about simplified underwriting program. We do have one currently. It's called our Jet Issue program. There's a special application for it, and if we have time, I'll show you where that's at on our website. But it's for clients that are getting permanent insurance. Their ages are 18 to 45. They're looking for face amounts $100,000 to $200,000 of permanent coverage. Okay? If that is the case, they have to use our Jet Issue program, which includes tele-underwriting, and will waive the labs and the exam. Okay? So it's a simplified underwriting program. All right. I'm going to get into the software on our website and kind of go through a basic overfunding IUL illustration, and then introducing to all of you our InsMark software, which is something that you can use, especially if you're wanting to compare the IUL to some other type of investment. So this is our homepage, www.producerworkbench.com. And this is our agent portal, so everything you need submitting new business, whether it's a paper application or electronic e-apply application, all the materials, creating illustrations, all those things, even checking your pending business are on here for you to view. So this is the home page. Under day-to-day task, under sell is really where you're going to spend most of your time. And so create an illustration is where I'm going to go. So if I come to create an illustration, and you'll get to this screen, you'll have either two choices. It'll default to the web-based. So the web-based software allows you to run them online as long as you have Wi-Fi. Anything you run online, myself or anybody on the sales desk will be able to see what you've done. Anything we run for you will be run on the web-based, so you'll be able to make changes if for some reason we're not open or it's on the weekend and you want to show something to your client. And then we have the software downloads. So if you click on software downloads, you can download the actual desktop version of Life Designs. Now just keep in mind, the web-based and the Life Designs do not reflect each other, so what you run on one will not be seen on the other. If you download Life Designs, once you create your agent profile, remember this access code. You'll need to use it one time. It's 10446. So we're going to focus on the web-based. I'm actually going to bring up, I'm going to launch Life Designs now. You might see this foresight down here. Just ignore that. That's a variable annuity. So we're going to focus on Life Designs. So launch Life Designs now. And then your agent number will appear automatically, but I'll just pull up Envita. Now, I get asked this a lot. I've had agents say, hey, I noticed on the illustration it's showing my home address. If that's how you got appointed, that's what it's going to show. So if you'd rather have it show a business address or something else, go ahead and contact our licensing and contracting area to change your address, and that will get changed and reflect on the online software. All right, so once you get logged in, it'll bring you to this screen. And we're just going to click on Clients and Cases. So we have a number of clients here. We'll create a new one. So to create a new client, now any clients that we have would appear under clients, and then you can see that we have this client, Sandra, created. So if she had any illustrations that we ran, you can click Show Cases, and they would be listed down below. Okay, so that's where you can find all of the illustrations you ran. But if we're doing a new one, we can click New. We'll just call it Envita Client. Leave the state as Virginia, and then we'll just assume that they're a 35-year-old male. Okay. The only thing you need here is their actual name and their date of birth, since we are age nearest. If you don't know their date of birth, you can type in their age. We need their gender and their state. We don't need their address unless you want that to appear on the title page of the illustration. So go ahead and click Return. So we now have Envita Client in there now. So down below, there are no cases. We haven't done any for this particular person. So we can click New, and we'll choose Illustration, the bottom one. So this brings us to this screen. The only thing we need to worry about changing is product. So product, that brings up all of our life products and then our DI as well. So if we're looking at the Excel Plus, we can choose the Excel Plus Index UL, and then we just have to click Go. All right, so that brings us to this screen here, which is where we enter in all of our details of what we're trying to illustrate. So here we already have our plan type in as a universal and index life. We already know our plan has been selected as the Excel Plus IUL. So class, based on what I'm going to run, I pretty much know this illustration is going to fall under jet issue because the client is 35, and I know their face amount is going to come in between 100 and 200,000. So with jet issue, the only underwriting classes available are preferred and non-tobacco, and then tobacco. So I'm going to select preferred. Now if they fell out of jet issue, you could select any of these, but the max for jet issue is preferred. So we'll go ahead and select that. If they did have some sort of a table rating, you would just choose non-tobacco and then the box next to it says special class, and that's where you can find your table ratings. But again, we'll just choose preferred. Face amount. This person's really not concerned with face amount. They're looking to maximize. So we want to avoid creating a MEC. So for face amount, we choose minimum non-MEC. Our amount for face amount is now grayed out because we're doing a search for. We'll choose option B. Option B allows us to get the lowest possible death benefit with the amount of premium that we're putting in. And the reason we want the lowest death benefit is we want to maximize the cash accumulation. So we'll choose option B. We only want option B while we're funding. Once the client starts taking money out, we want to levelize that death benefit. So I'll click on this little bar graph here. We'll do option B from 35, and we'll say this client's, based on our conversation, wants to fund till age 67 when they plan on retiring. It's not letting me change it for some reason, so I'm going to click on it again. Huh. Never had that happen before, so ideally that's what you would do. I'm not sure why it's not letting me type it over, so maybe I'll have to talk with their software team to fix that. And then input is where the premium amount, let's say they told us they want to put in $300 per month. Okay, let me type that in here. I apologize, my keyboard stopped working. There we go. Okay, so I can go back and switch that option B to option A. Should let me do that now. There we go. So you can see I clicked on that bar graph, switched from option B to option A, and then had a level death benefit, which is the option A death benefit. Option B is an increasing death benefit, so it would be the death benefit plus the cash value. All right, so we have the option B in there. We have our $300 a month premium. We're going to fund till age 67 on a monthly basis. So on the right-hand side, we're illustrating at 6.86%. If we had any type of 1035 or lump sums, we could put those in. And then we can also change our allocation as long as it equals 100%. So by default, we're showing 100% the S&P 500. Now keep in mind, whatever your allocation is on the illustration, you want the application to match. All right, so then if we solve for our income stream, so in the left-hand column, we want to click on Solve For. And then we're going to solve for a cash flow. And the search criteria is our paid-up endorsement. Paid-up endorsement prevents the policy from lapsing because we've taken out too much money. So the last thing we want to do is create a taxable situation by that policy lapsing. So we'll do a cash flow from 67 to 87. And then if we look at our actual cash flow here on the left-hand column as well, we can see that we're solving for withdrawals right now. So we wanted to show a variable loan. Remember, we talked about loans. So we'll click on Loan, change our loan type to variable, and then at the very top, we got these little icons, and we can click on Preview. I know I'm going kind of fast, but I want to make sure we get to some things. So don't expect you to remember all this, but you can definitely call me and reach out if you have any questions. So here's our illustration. So we have a 35-year-old male, death benefit's $117,000 to start with. Page 3 shows us our living benefits. So you remember I said the client would know what they're going to get for living benefits the very first time you show them the illustration. Well, here you can see it spells out. So for critical illness, they're eligible for $29,261, chronic $58,000, and terminal $87,000. So they know up front if they were to get a critical, chronic, or terminal, what they're going to get from emeritus. Now, if you want those living benefits to be higher, the death benefits to be higher, there's some other things we can do that'll still make the illustration look good. So feel free to reach out to me if that comes up. So what does the illustration look like? All right, so the client's putting in $300 a month or $3,600 a year in this first column. So over a 32-year period, they put away $115,000. Okay. Now, if the market or if their indice performs at 6.86% a year, which is pretty conservative, that would allow them to pull out a little over $29,000 per year for the next 20 years. So that's a great income stream to supplement the retirement income. So if we look at the end of that 20-year period, again, they put in 115. They're able to pull out 580. So it's really netting out 465,000, all tax-free because they're doing loans from the policy. So this is a great illustration to show them how life insurance can work for them. And at the same time, it's also supplying death benefit. So if they were to retire, you know, that they work till age 67, retire, I've put away $115,000 into this thing, and they're unfortunate and something were to happen and they die that very next day, you can see here to the right they have a death benefit of almost $465,000, all tax-free to their beneficiaries. They're not going to get that with any other type of investment. So one thing I mentioned, since a lot of us have seen me go through this before, but what we haven't seen is how to enhance this. Because sometimes you have a more sophisticated client that says, you know, that's great, but I could do this with mutual funds. I could do it myself. I could work with my investment broker. So how do we combat that situation? Well, within the software, next to where we clicked on Preview, there's a little button that says Values. So if we click on Values, it takes a moment to pop up. It'll take us to the screen, just really a summary of the cash values and the premium going in. But there's another icon now at the top. It says INSMARK. And I sent NVIDIA all the instructions on how to get INSMARK, so I'm sure they'll send that out with the slides that I went over today. But if I click on the little INSMARK icon, it brings us into the INSMARK software. So I'll just click on INSMARK Illustration System. Again, we'll just get into the system here so I can show you quickly what it looks like. We'll create a new client workbook. We'll call it NVIDIA Client. I'm not sure if I have another one in there not called NVIDIA, so we'll just call it NVIDIA Client 3. All right. So there's lots of things we can do within INSMARK. We can compare to other investments. We can do like buy-sell agreements, all those types of things. But for this, we're going to be comparing the personal insurance versus other investments. Okay, so there's lots of things we can compare, but the thing we're focusing on is other investments versus your policy or this IUL policy. Okay, we'll click OK. That's going to illustrate through year 86. Tax bracket's important because this will play on, you know, mutual funds are taxable for comparing it to mutual funds. So if you know their tax bracket, that's great. If not, we can get pretty close. We'll just leave it to 31%. And we have investment details. So we're going to compare this to, I don't know if mutual funds in here. Let's see. We're going to compare it to a side fund. And we'll call that side fund a mutual fund. And we want to make sure we're showing the same yield, so 6.86%. Let's see. Actually, we want any taxable investment. We'll call it a mutual fund. So mutual fund, if they were looking to do that, since they're already probably putting money in the Roth IRA and maxing that out, a mutual fund is going to be a taxable investment. But they told us they think they can get the same thing. Actually, I'm going to leave it as a side fund because I want to put sales charges in here. So do a side fund and call it mutual fund. Now, mutual funds tend to have some sort of sales charge and management fees, but you know, actually, let's keep them fairly low. Let's say it's a 1% sales charge on their mutual fund, and then we'll do a management fee of 1% as well. So those are fairly conservative. And then we can click on this report selection, which brings up the reports that we want to show. So there's lots of reports here and some great charts, but I'm just going to get rid of a lot of the charts. They do make things fancy and pictures are great, but I really just want to show a few things here. All right. And we could add a cover page if we wanted. So we got NVIDIA client. We can say it's from NVIDIA, Everything we type on here will appear on the title page. We can also change what the picture looks like. So if you know they're going to want to sit on the beach in the retirement years, you can make that. So really, you can change the title page and put lots of different things on here. But for time, we'll just go ahead and preview the supplemental illustration with InSmark. So after the title page, this great slide or page right here pretty much goes over all the things that I talked about in the presentation earlier. Why would you choose an IUL or life insurance? So we got the cash values accumulating, tax deferral, competitive interest rate, tax-free access, so all those things. Okay, so all the perks of using life insurance. So here goes side-by-side comparison of the mutual fund, which is the side fund, versus the Excel Plus. Now it's going to show you cash accumulation for both. Remember, the side fund's a taxable investment. So one thing right away that the side fund or the mutual fund doesn't have is death benefit. So you can see in column 10, if the client were to die in year 1, they have $120,000 all tax-free. With a mutual fund, if they were to die, they have a taxable $3,700 that goes to the beneficiaries. So we already got a huge perk by doing something within the mutual fund. Now, yeah, in the first couple of years, the mutual fund does look a little bit better from account value because we don't have surrender charges, but it's pretty quick that you can see that the surrender value on the IUL is outperforming the mutual fund. Plus, the mutual fund's a taxable investment as well. So what I really want to get into is looking at an income stream. So at age 67, the client is looking to take money out for retirement years of their IUL policy. So that allows them to take out tax-free $29,024. If we look at the mutual fund, in order to take out that same income, it doesn't last very long. And the reason for that is because of the taxation that's happening each and every year on the mutual fund. Because we're losing money to taxes, we don't have as much money growing for us or working for us that we would on a tax-deferred vehicle like a life insurance policy. So that mutual fund quickly runs out of money. It only makes it really about, let's see, 1, 2, 3, 4, 5, 6, 7, 8 years, and then by the 9th year, they're still able to pull out a withdrawal, but quite a bit less than they were hoping to rely on with the $29,000. So this is a quick comparison to show you, and you can do any type of investment. If they're looking at a qualified plan, if they're saying, hey, I'll just take my own Roth IRA, I'll put more into my 401k, any argument they have towards doing an IUL, you can compare that investment and show exactly side by side what they would be getting from that other investment. Especially, this is great to do a qualified comparison as well. Okay? So just keep this in mind. You know, if you do have those more advanced clients, we do have other tools to really enhance the IUL illustration that you're showing. All right. Do want to leave a little bit of time. I know that was kind of quick, but I want to leave a little bit of time to look at the website a little bit further. Okay. So on our homepage, again, so where do you submit business? Where do you get applications? Well, if you're wanting to do electronic applications through the eApply, you can come here under Click New Business, and then we have an option that says eApply. So if you go through the eApply system, it's basically our application. All the applications are on there, including our Jet Issue application. And it's a fillable application, so you just click the boxes for the things you need, and it'll show you how complete you are as you click things. And then once you get the app fully complete, you can go for electronic signatures. And whether the client's with you in the office or not, if they're not, you can send them an email, and they can click on a link and do electronic signatures. Or if you have a paper app instead of faxing, I would highly encourage you to do upload via secure messaging. Okay? In order to get the paper app, we'll click Emeritus here and go back to the home page. If you want to download the paper app, you can come to Prepare for a Sale, and then under Task, you can click Get Forms and Applications. For the business area, you'll choose New Business, and then for the form type, If it's a full app, you'll do the application kit. Or if it's the jet issue, that 18 to 45-year-olds, make sure you choose the jet issue kit. Choose your state. So I'll choose Nebraska, where I'm at. The product, Universal Life. Product name, Excel Plus. Then we'll go ahead and click Add Selection. And then Search. And then you can download the application and print it off from here. You can even start filling it out from here. It's a fillable PDF, but once you get to the signatures, you'll have to print it off to get those. And then the other thing, I won't pull up any agent information, but if you wanted to see your pending business, whether it's pending or issued, and see what a status is, on the same page you can go to Check Submission Status. And it would bring you to a screen right here that would have all of your client's information. So that's everything I have. If you do need to talk further about any of this, my number is 402-467-7800. Again, that's 402-467-7800. And then before we open it up for questions and turn it back over to Tim, there are a few questions I see here on the chat. Russell had a question about medical marijuana users in California. Are they eligible for jet issue? Yeah, they could be, because they could still be considered tobacco users. So they could be. It just depends on, all the specifics, how much marijuana they're using and how frequent, what they're using it for, so all those things. So I can't say for sure whether they'd be knocked out of jet issue, but yes, they could still be considered for that. Are all the fees on the illustration? Yes, everything that's cost of insurance, all those are in the illustration. If you need to run a report to see those, I don't think I do have the software pulled up. So if you want to see a report of those listed out, you have a client that needs to know what they are, you can actually click, I believe it's Report Selection, and then you can choose Expense Report, and that'll add some pages to the illustration to show you those expenses. So we got a question about commissions. Unfortunately, I can't talk about commissions, so I'm sure everybody at Envita would be more than happy to talk to you about any commissions that you can receive on the products. See, again, my number, somebody was asking for that, 402-467-7800. And Denny, good question on the e-apply. No, those applications do not need to be printed for wet signatures. So what I was showing you here is if you wanted to do a paper app. This is what I showed you, is how to pull up the paper app so you could print it out and then have wet signatures. The e-apply does not need to be wet. They can sign online and everything's electronic, and then you submit it electronically as well. All right, and then let's see, Isabella asked about a client with MS. Call me offline, Isabella, and we can talk specifically about that particular case. All right, Tim, back to you. We can see if there's any other questions.
Lady, as always, I appreciate it. Thank you so much. A lot of great information. I got a lot of great notes. Everybody get plugged into the weekly meetings. Work on the list as soon as you get off. Going to be a great week. Think of who do you know in Texas. And let's start off 2017 with a bang. Eric, thank you very much. Can't wait to have a great year with you.
Thank you, everybody.